Hello traders, it's Thomas here from VegaFX, and in this video we're going to be covering over the London Open, why it's so special in the Forex world, and why it's an integral part of not only my own strategy, but also any other smart money concept traders' plan as well. Before we begin, guys, I just want to say if you do enjoy the video or if you do learn anything, it would be a massive help if you did like and subscribe. Not only does it help me for YouTube's algorithm, but you'll also be able to see any new video that I put out. And I do upload about 2 to 3 videos per week moving forward. Now, without any further ado, let's get straight into the video, and I hope you guys enjoy. So guys, to discuss the London Open, we do have to first discuss market hours in general within the Forex market. Now, the Forex market is a 24-hour market that's open 5 days a week until the weekend. And it is split up into 3 main trading sessions. These are geographical locations or time zones, if you may, where financial hubs of the world trade during those times. So you've got the Asia session, which is situated or based in Tokyo, but it does encompass the whole of Asia. You've also got the London Open, which encompasses the whole of Europe. And then you've got the New York session, which encompasses the whole of North America. These different trading sessions do have different characteristics, normally derived from the amount of volume that goes through them each day on average. So, for example, you've got the Asia session, which is about 6% of the total market share of the Forex market. And then you've got the London Open, which is about 34%, and the US, which is about 16% of the total volume. Now, because of this low volume during the Asia session, price does actually tend to go horizontal more, and it does form ranges. So by here, we can see that it's sort of ranging like this. And then you've also got this, which is a double top. Now, this could have obviously been manufactured by banks, but we do know that price does like to move horizontally a lot of the time during the Asia session. Now, during the London Open, where the most volume comes into the market, and it does actually technically start a bit before that, but banks don't literally start trading from 8 o'clock. They do open their doors before that and start trading. So you could actually see this push by here is most likely the European banks trading, or mostly. And you can see that price actually will normally tend to sweep through liquidity that's been built up during the Asia session. So you've got this sweep here. Through this liquidity, there will be liquidity built up, people going short by here. And basically, it gives in the order book liquidity for price or orders to be fulfilled at a certain level, which allow banks to move more of their money, basically. Price comes down, forms a equal high by here. So we can see that because of this, there will now be more traders getting into the wrong side of the market by here. Price comes down, which for anyone in my Discord, you'll actually know that I did actually look to get into this trade, but I think I didn't because it was the Asia low and I didn't actually get a confirmation entry opportunity. But as you can see, it's come down into this demand zone and price has then rocketed up all the way up here, which has probably caused a double top. But that's for another video. And then it's come back down. Now, as we get into the US session, guys, we also have all these American banks opening their doors and trading. And these sessions overlap. So you can see that the London session actually ends at about 4 p.m. GMT. But within this time, you've got the London Open, where there's a massive amount of volume. And then you've got the second highest trading session in terms of volume opening there. So you've got this overlap between the two, which can cause either price to reverse or price to continue moving upwards, or you will get obviously massive spikes of volatility. But this region by here, guys, is the best time to trade simply because the most volume, and you're also going to get the highest price movement per pip as well. So just a quick look at my chart, guys. You can see that all of my trades over the last month have been taken during either the London Open or the US Open. And as you can see on the bottom here, this is where the highest volume comes. So as you can see during these red regions, which is the Asia session, which I like to mark out, you could see that volume is minuscule. and then it rockets up during this time. You can see price comes up and comes down, and same by here. And this is where you get the most movements, guys, in terms of price. And it allows you to get into not only trades that are going to run further because of the higher volume, but because of this higher volume, you'll actually find that price action is actually a lot clearer to actually understand. Spreads are going to be lower, and price is going to behave more efficiently, which means that it's actually going to come back to mitigate regions of unmitigated imbalance. So guys, if we come back to the OG chart that we were looking at earlier, you can see these time zones marked out. The Asia session I do actually like to highlight with this indicator, just because it does help me define the range that has been created during this time. But you've got spread hours before that. You can see around this time, the market really freezes up and price slows down, and there's literally nothing going on. The Asia session with its low volume is actually really inefficient. So you can see that price actually rarely comes up to mitigate these unfulfilled orders at each supply zone. Obviously, it does start doing it by here, but we actually start moving laterally across anyway. And you can see by here, guys, this is really when the London banks do start opening. Like I said, this is just a technicality there. They don't actually start trading literally from that point. They do start trading before that. And you can see by these black candles, which I'm using my imbalance indicator on, you can actually see that prices really started moving up, taking out all this liquidity by here and leaving unfulfilled orders in this region. So what can we do, guys? We can draw our demand zone, and price actually comes up and forms a little bit of inducement by here and takes the demand zone. And then price rockets up. You can see the volume really taking off now. You can see this by the larger candles, much larger compared to those candles. And you've got this huge candle by here. Price actually wicks into a demand zone, sorry, a supply zone. You'll actually know if you're in my community that I did get in on a market order by here with my stop loss above there. Prices come down. So you've still got another opportunity to get into this now. It comes down, retests, and if you did have, obviously this can be refined, but if you did have another supply zone by here, you could have gotten on that retest. And even by here, you'll actually can see if you went onto the 1 minute chart, there'll actually be a confirmation setup within this time period, which I will cover in a future video as well. Now, obviously this is London and European banks. This is American banks. You've got this overlap, and you can see the US banks have come in and completely tanked the market, but they've only tanked it down into this demand zone by here, guys. This is where we would have had another setup, and you can see that by this unmitigated imbalance. So as for now, all this imbalance has been mitigated, leaving only this imbalance. You can see prices actually come back up. But it has actually swept there. But you did still have this demand zone drawn. You could have still liked to get in by there. So guys, that's one example of different trading sessions within the day. I'm going to just pull back the day before that. We've got our indicator by here indicating the Asian range. I will just change the time zone on that. I know the clocks did actually go forwards within this time period. You've got this inefficient price action by here. So you can see that price isn't actually coming back to retest any demand zones. And then once we get to around 7 o'clock, you actually get our first supply zone retest. And then you can see this imbalance by here, large volume coming into the market, moving price downwards, left unfulfilled. What do you get, guys? A demand zone retest. You could actually have got in but there, although you would have probably got taken out of break even. You could have also got in by here as well. And if you do luck, I know it's hard to see, but let me actually get my rewind tool. You'll actually be able to see that there is a hidden 1 minute confirmation there within there. So you've got price coming down, breaking down there, and you've got this nice little tap back into demand. So I mean, just from looking at this, guys, if you've got your got your order set by here. You would have had an order set by here. You got into these two trades and literally just wrote it down to here. You're looking 18R on that confirmation. You're looking about 7R on that risk entry there. And this happens every day, guys. So guys, just one more example, which is going to be on the day before that. And I'll just bring it over here. Price action on this day was actually very volatile. You've got a lot of news events, which is going to cause this mass volume in the market, huge volatility, and price action is going to be a lot less clearer to actually understand. So sometimes it is best if you're having a bad week to actually avoid these times in the market. Sometimes they can actually be the most lucrative days, but they can also bring much higher risk to reward as well. Now, you can see that you've again got this inefficient price action by here. You have got these large imbalanced candles. However, they are always going to be low volume. So there is going to be less orders in these order blocks for price to retest. So it is less likely. However, you can see over here that price did actually respect it, and it actually came up to retest again. So I wouldn't have recommended getting in with a risk order by here, just because, like I said, there is a lack of orders. So price is less likely to respect it. However, you could see that price has come back to retest after breaking down. So you would have been able to get in with a confirmation order there on a lower time frame. Now, we actually see by here, guys, the market really picked up. You've actually oh no. Let me just go back to, where is that? There we go. Sorry, guys. If we check by here, you can see that you've got this liquidity builds up by here, sweep above it. Obviously, the European banks coming in by here, retest of this. You'll actually know if you're in my community that I did get involved in this as well. In a hedge position, I was actually hedged both ways in the market. But price actually decided during the London Open to wick through. Obviously, this would have been inducement to go lower, and it's actually decided to wick through into this supply demand zone over here, which you'll know that I also had an order set up, and prices then rocketed up. So just a few examples, guys, of why the London Open is such a powerful time to trade the market. Obviously, wherever you are in the world, even if it is the London Open is in the evening for you, say you're in Australia or New Zealand, I am still going to recommend staying up just to trade it, just because you're going to have a much better time trading this price action. I know obviously not this day exactly, but this region rather than this region, just because price is never going to be as efficient. So it's not going to come back to retest levels as much compared to the London and US session. Obviously, like I said earlier, it does depend on the pair that you are trading. So you've got European and American pairs, and then you've got Asian pairs, or that sort of geographical location, like the Aussie dollar, for example, and the New Zealand dollar. They are actually going to see better price action during the Asia range. So that is it for me, guys. So what did we learn today, guys? We learned that there is different trading sessions throughout the day with different characteristics. So we've got the Asia session with very inefficient price action, which is harder to trade. You've got that liquidity build-up during its range, which is ready to be swept. You've got the London Open, where banks sweep through that liquidity, and with its larger volume and efficiency, you actually have a plethora of trading opportunities. And then you've got the US Open, which overlaps the London session and brings with it these large price movements, which does allow you to capture much larger profits. So that is the end of the video, guys. I hope you enjoyed and learned something. You will find in my description underneath the video a link for my community Discord, where you will find like-minded individuals looking to learn and grow. And also you'll see my analysis for the day, such as the zones that I'm trading from. If you did want to follow me on Instagram, I do also put out educational content on there. Now I will catch you guys in the next video. Peace out.